been a tough year for the global economy. Speculation about a possible rate hike by the US Federal Reserve created uncertainty in global markets. China, the world's second largest economy, showed signs of a slowdown. And as currencies in emerging markets tumbled, so did oil prices.
The last 9 months or so have been particularly challenging for the oil industry. The crude oil prices lost half their value.
For 10 years prior to the downturn, oil has sold for between $90 and $100 a barrel. But in June of last year, the market started its latest downturn, reaching its lowest levels since the recession in 2009. Oil prices are now half of what they used to be. But why now? The answer is twofold: a glut caused by oil production and lower demand due to the ailing global economy.
US shale has driven up global supplies at a time when global demand has started waning. China's economy is slowing. Combine that with a strengthening of the US dollar, in which oil prices are denominated, then we've seen a cataclysmic fall in oil prices.
From an individual standpoint, thanks to lower prices at the pump, householders pay less for gas consumption all around the world. Plus, it helps oil importing countries to reduce their current account deficits. But one person's expenditure is another person's income. So, declining prices hurt the economies of all oil exporters. Saudi Arabia, Russia, Venezuela, Brazil and Nigeria are a few that have suffered economically, especially Russia. On top of US and EU sanctions, falling oil prices have weakened the Russian ruble, and consumers there are feeling it.
Мы видим, что товары дорожают, и дорожает вокруг все. И это настораживает, это неприятно.
Когда, во-первых, мы смотрим, как это попадается, что, извините, попадается именно на распродажу у нас, то есть эти вещи, или какие-то периодически бывают скидки, и это раз. Во-вторых, если уж понравилась вещь, то ее возьмешь, вне зависимости от того, что она подорожала там на какие-то десятки, может быть, чуть даже подороже.
Lower prices also led to oil companies to cut investments in exploration, and more than 200,000 oil workers around the world have lost their jobs. And then there's the oil cartel OPEC, which has the mandate to ensure the stabilisation of oil markets and the ability to intervene directly in the pricing. But even after oil prices came down below fiscal break-even levels for many OPEC members, they refused to cut production. Although Venezuela has the biggest oil reserves among OPEC members, it doesn't run the cartel. Besides Venezuela, Iran and Algeria have tried to convince OPEC to cut production to stabilise prices, but the Saudis believe cutting production will cost them market share against the US and Russia. Even though low prices hurt Saudi Arabia's economy, there are some who accuse Riyadh of trying to hurt Russia and Iran politically by keeping prices low. After all, a sharp drop in oil prices in the 1980s triggered the fall of the Soviet Union. Whether oil prices will stabilise anytime soon is a hard question to answer in a volatile world market. According to International Energy Agency's latest oil market report, global demand growth will slow next year. Global demand growth is expected to slow from its 5-year high of 1.8 million barrels per day in 2015 to 1.2 million barrels per day in 2016, closer towards its long-term trend as previous price support is likely to wane. But the Saudi oil minister, Ali Al-Naimi, disagrees.
Demand is picking up.
Demand is picking up.
Supply is slowing.
Some analysts say that $80 a barrel is the new fair price, but currently Brent crude is far below that, trading at between $45 and $50 a barrel, and some think that it could take years before oil prices recover.